Yes, good morning, Tim, and good morning, viewers. My name is Richard Brescianini. I'm the Executive Director for Heavy Rare Earths Limited. Next slide, please. And the next. This slide shows the value proposition of the company, which was listed in August of last year. I think everyone understands the major dynamic around rare earths. There are ongoing supply side issues. I think they'll remain for quite some time to come, and surging demand for rare earths, which is really driven by the electrification of the transport sector and also the modernisation of our energy sector around the world. And both of these things are going to continue to feed a higher price environment, even though rare earth prices have come off recently. We're probably going to see a strengthening environment in the medium term. The company's main project is Kaolinya. Kaolinya is in the southern part of WA. You can see there on the map, about halfway between Norseman and Esperance. And of course, that is in Western Australia, which is one of the world's primary mining jurisdictions. We came to market with a maiden resource at Kaolinya, 28 million tonnes at 625 parts per million total rare earths, where our magnet rare earths, praseodymium, neodymium, terbium and dysprosium comprise 25% of the mix, which is quite an attractive mix, considering that really when you sell rare earths, you're only getting money for those 4 rare earths and mostly PR and ND. We came to market with that resource, but since that time, we've gone out and drilled another 12,500 metres of air core drilling. We undertook that program the latter part of last year. There are some assays still pending, but they'll be out imminently. And in that program, we encountered thick intervals of rare earth mineralisation across a very, very large area, much larger than the resource area occupied. And there are numerous high-grade assays in that drilling, up to 0.7% total rare earths, which is quite extraordinary for a saprolite-hosted deposit. We're planning to deliver an updated mineral resource in the 3rd quarter of this year, so sometime from July, on the basis of the program that we've just completed at Kaolinya. And finally, we have a strong team that's focused on the development of rare earth resources, rare earth assets. There's myself. I have about 15 years experience in rare earths in various areas. You can read there yourself. And more importantly, we have John Byrne, who is the non-executive chairman of the company, who has deep experience in the resources sector, including 45 years worth bringing mines into production. Next slide, please. There's our corporate snapshot. As I said, we only listed in August of last year. We only have 68.3 million shares on issue. And you'll have seen in recent days when we put our quarterly report out, we have around $2.6 million in the bank. Next slide, please. Okay, let's move on to our main project at Kaolinya. The map there on the right shows our tenement position in green. It's about 250 square kilometres, and you can see its location with respect to the deepwater port at Esperance and Norseman up to the northwest, and of course the Coolgardie-Esperance highway to the west of the tenement. There's also a rail line that runs along the highway as well. So it's really well located with respect to general infrastructure is concerned. The project is wholly located on unallocated Crown land, and that's an important distinction to make. You can see in the map there the cleared areas, which are of course wheat belt areas. We are off the wheat belt, and so should we be fortunate enough to find ourselves in a position to develop a resource that we'll be soon upgrading, then we will have to negotiate a native title agreement with the local Naju Indigenous peoples. Mineralisation, as I said earlier, is shallow, flat-lying supergene concentrations of rare earths in saprolite, similar in style to the southern Chinese iron absorption clay deposits, which are of course the world's major supply source of heavy rare earths. Our drilling in 2021, as I mentioned earlier, when the company was private, established the project's maiden resource of 28 million tonnes at 625 parts per million, And we've since discovered very, very extensive new developments of rare earths in saprolite away from those resources. We've also been undertaking a very comprehensive program of metallurgical test work on the mineralisation. I'm not proposing to cover that today, but I'm certainly open to questions at the end of the presentation if people would like to know more about that. Needless to say, or it's certain to say that we've delivered some encouraging results, and we're going through quite a program internally on looking at those results and optimising them. Next slide, please. A little bit more on the drilling that we undertook at Cowlinia in the latter part of 2021. It was a 441-hole, 12,500 metre program of vertical air core drilling. We drilled holes as deep as about 58 metres from memory, so quite a shallow program. We've discovered a very substantial new 13 square kilometre western zone of rare earth mineralisation. You can see the map on the top right there that shows the location of the western zone in comparison to our Cowlinia North and South resources, which make up the 28 million tonnes. So you can see it's a much more substantial area of drilling that we'd undertaken previously. The western zone is flat-lying, again, extensive, averages about 11 metres thick versus the Cowlinia resource, which is around 10 metres thick, and some of those metrics are outlined in the table below the map. And it's overlain by an average of 19 metres of overburden. When you think about this in terms of development potential, it's going to be a free dig operation, no drill and blast, so the mining will be relatively straightforward. But as we all know, as it relates to rare earth developments, most of the challenges lie in processing. In our drilling, which was very, very pleasing results from my perspective, we intersected some significant thicknesses of mineralisation. Some of those are listed there on the left. Up to 3,100 ppm in saprolite, and most importantly, we've got very, very thick development. So you can see some of the thicknesses there between 19 and 42 metres. There are numerous of those types of intersections, which investors can look at table 1 of several market releases that we put out between January and more recently. So table 1 in those market announcements lists the significant rare earth intercepts that we encountered in that 12,500 metre program. And by the way, the total amount of drilling that we've undertaken on the tenement to date is around 15,500 metres when you take account of the drilling that we've done in the resources previously. And you'll also note on that map some of the far afield drilling that we've done along tracks elsewhere across the tenement, the furthest of which is around 15 kilometres from the known resources. We're looking at upgrading the mineral resources in the third quarter of this year. I've just engaged a resource consultant to do that. That's going to be a roughly 8 to 12 week exercise. That's now commencing. And I'm anticipating a material increase in resources for the project from the current 28 million tonnes at 625 ppm. And you'll notice in the table below the map there that some of the length-weighted average grades that we're achieving at both the Cowlinia resource and at the Western Zone are quite substantially higher than the average resource grade. Next slide, please. This is just a slide on the rare earth market overview. I think everyone that has an interest in rare earths would be familiar with this. Of course, it's characterised by tight supply, particularly in the heavy rare earths, terbium and dysprosium, where China itself is relying on imports from Myanmar to supplement its own supply of heavy rare earths. And of course, surging demand, as I said earlier, which is driven by electrification of the transport sector and renewable energies around the world, particularly wind. So we see a very, very strong future for rare earths, and I can assure investors that the company's focus will remain on rare earths for the foreseeable future. I should also have mentioned back on slide 1, you'll have noticed, or the opening slide, you'll have noticed the second project in the Northern Territory called the Duke Project. Our target there is heavy rare earths in xenotime. Browns Range style, similar to Northern Minerals Development. And we've also picked up 2 new projects in Western Australia, again for rare earths, both of which have been disclosed in our recent quarterly report, which was only out yesterday. Thank you very much for your attention this morning, and I'm very open to further questions.
Thanks, Richard. Short and sharp and sweet. Thank you. Now, a technical question. Your deposit is clay as opposed to hard rock. Which is more conventional, and what are some of the kind of key differences and benefits between extracting rare earths from hard rock compared to clay, or clay compared to hard rock?
Well, as I said earlier in the presentation, Tim, certainly there's a huge difference in the mining of those resources where your clay resources are going to be exploited without the need to drill and blast. Okay, so that's the first thing, is that certainly the mining is going to be far more straightforward in the clay-hosted space than it is for the hard rock, where you're looking at open pits or even in some cases underground operations. So that's the first point to make. The second point to make is that certainly in the case of China, which has the only clay-hosted deposits being exploited today, the processing of those is relatively straightforward. They use ammonium sulfate or salt-based solutions to be able to leach out their rare earths, for the want of a better word. I'm not sure whether we're dealing with that particular situation here. I think that we're probably going to be presenting an acid leach type situation to the market, but nevertheless, I would say that we're looking at an overall operating cost that's going to be very competitive compared to the hard rock guys. So to wrap up, mining costs should be cheaper. And when it comes to processing, what we're aiming to do certainly is deliver a low operating cost environment. In our case, probably looking at acid leach.
And is there any radioactive components to the rare earths, and does that complicate the mining process?
Very small in our case. I think the average from memory is somewhere around 11 parts per million or less for both thorium and uranium. So we're looking at very, very low concentrations of radioelements. They're there. You have to deal with them, of course, in processing. But at those concentrations, I'm not expecting it to throw up any major technical challenges. More the challenges are going to be around in the permitting. But again, at those very low concentrations, I don't think the regulators are going to be overly concerned about it.
And you also discussed you're kind of expecting to increase the mineral resource by the third quarter. How do you justify this, and what's the next steps, I suppose, to ensure that this gets met?
Well, the justification, I guess, is my reading of the drill results as they were coming through. You can imagine, I think we all do this in the industry, we're keeping back of the envelope calculations as we go along and start delivering assay results into the market. What we, of course, can't deliver in the market at any particular point in time are our back of the envelope calculations. Last I looked, they weren't JORC compliant. So, we've got some numbers we're working with internally. So I remain very, very optimistic that we'll be delivering quite a material increase in resources, certainly in tonnes, and there's every chance that we'll be delivering a great increase on the basis of the results that we've delivered into the market thus far.
And of course, the industry, as you mentioned, has had some very strong tailwinds. Is there potential for Australian government funding? I know there's kind of the Australian Critical Minerals Research and Development Hub. Is there any government funding options for heavy rare earths?
They're ongoing. Look, we haven't tapped into those funds ourselves at this point in time. And I think really the time to do that is going to be when we get into larger scale metallurgical development. So when we're looking at piloting processes, larger scale piloting of processes, at this point in time, really we're just undertaking laboratory scale work. So it's relatively cheap and straightforward for us to be able to fund that from internal resources. But once we start getting into piloting, and then of course, I think that, certainly money is being made available for processing for rare earth companies. You'll have seen that in the last few years where both state and federal government are stepping forward with low-cost loans, with grants of various descriptions. I think that will continue because of the geopolitics around this and the fact that, the world is heading in that direction as it relates to decarbonisation. So, governments certainly want to be able to promote their countries to do their bit. And part of Australia's advantage is, of course, that we have a strong natural resource environment. and government wants to do everything it can to encourage further downstream development. So, you know, the clay-hosted space, I think, is right there for further help from the government, and I think that will just happen over time.
And is it too early to have offtake discussions?
Look, in my view, it is. I can't speak on behalf of everyone. I mean, I've had 15 years in rare earths. I think I have a reasonably good idea at what point it's sensible to have discussions around offtake. But my view again is that until we deliver a resource estimate that is of the size where people are going to start taking notice, and I think that will probably be the next one that we do, I wouldn't want to be sort of pushing the barrow too hard with potential customers out there. And by the way, that landscape is changing quite substantially with Australia now, or with operators in Australia potentially bringing forward downstream processing options that haven't been previously available. So there may be customers actually in Australia that we can begin to talk to, rather than the downstream customers in the automotive sector or in the wind sector, where you would have been forced to do that in the past.
And just to finish up, I mean, 15 years experience in the rare earths industry is pretty unique, given we're seeing a lot of new projects online. How have you seen the market change over the last 12 months or a couple of years? Well,
the good news in the market changing, of course, is that there is substantial money coming into the market. That's really never been available in the past, where there were a few proponents, pushing things along for many, many years, and money was really difficult to come by. Today, on the other hand, there's a lot more interest from the market in helping rare earth projects move along. And that's going to change the way in which we all undertake our business. When you get more people looking at a problem, and let's talk about the clay-hosted space, when you get more people looking at a problem, you're likely to come up with answers. But that can only happen if individual groups, individual proponents like us are funded to be able to do that. So for mine, that's the biggest change that's happened most recently, is the lift in interest in rare earths, and certainly in the clay-hosted rare earth space in Australia.
Richard, that's all we have time for. Thanks for your insights and thanks for your presentation. Have a nice weekend.
Thank you, Tim. Same to you.